Hi everyone. Today we have with us Vikram Gupta, founder and managing partner of IvyCap Ventures. They are a big investor from an ecosystem perspective, and they've invested both in fintech side as non-fintech side. So he's one of the best person out there to talk about how the impact of COVID-19 is there on the ecosystem and how fintechs and investors should look at it. So with no more wastage on my side, over to you, Vikram. Can you give me a quick perspective or give us a quick perspective on what IvyCap is all about? And go ahead.
No, thanks a lot for having me for this podcasting. So I think the brief background I'll give you first, about IvyCap Ventures itself. We are currently managing two funds, out of which we are investing from the second fund right now.
Mm-hmm.
First fund, we invested in 10 companies. We've exited from 2.
Okay.
Second fund, we've already invested, in addition to some follow-on of Fund 1, we've also invested in another 10 companies. And we are also in the process of setting up an angel fund,
Okay.
and so a venture debt fund.
Mm-hmm.
So all put together, if we have to look at the assets under management, we're talking about close to $200 million.
Okay. It's pretty large.
Yeah. And if we have to look at our LPs, this is all domestically raised capital.
Okay.
Raised our money primarily from the Indian institutions,
Mm-hmm.
and also from the IIT Alumni Trust, which is a
Mm-hmm.
collective pool of the alumni of the IITs around the world.
Mm-hmm.
This IIT Alumni Trust is represented by the deans, faculty, distinguished alumni of various IITs.
Okay. Okay.
And part of the fund, which is very unique, which you would probably not see in any other fund around the world, is a portion that goes back from the fund manager's profits,
Mm-hmm.
endowment to the IITs.
Okay.
And this actually has also encouraged us to create India's first endowment fund, which has been created now for IIT Delhi, which is targeted to be $1 billion fund, which was launched by the President of India on October 31st last year.
Okay.
With an initial commitment of 255 crores. So that is something which we are very proud of, because the genesis of that comes from an entire thesis of the fund, with the give back philosophy, with the endowment philosophy, which the alumni have quite actively contributed to. We believe that this will now scale up across other educational institutions, not just the IITs, but beyond IITs, like the IIMs and other educational institutions.
Mm-hmm.
And that will encourage innovation in India at the grassroots levels, and will encourage further venture capital investments, and therefore contribute towards the growth of the country. So that's broadly where we are. In terms of our investment focus areas, our core investment focus is at Series A or Series B levels,
Mm-hmm.
Starting from 15 crores ticket size, going up to, we've even done 40 crores and even issued a term sheet of 50 crores. So that's the range. Even though with the angel fund, we have now gone down with a ticket size of about 1 crore as well,
Mm-hmm.
where we're looking at tech and deep tech companies.
Mm-hmm.
From sector perspective, we are technically sector agnostic.
Mm-hmm.
But when we go out in the market to look for investments, we are looking at fintech,
Mm-hmm.
consumer tech, health tech, agri tech as well, and B2B SaaS enterprise businesses as well. And that's where our portfolio, you will see most of the companies. On the consumer side, we have companies like Purple, Clovia, Bluestone,
Mm-hmm.
eShakti, Biryani by Kilo. On the fintech side, we have companies like FT Cash, Lendbox, and there's another one which we'll be announcing very shortly, which is in the rural banking space.
Okay, this is interesting.
Pretty sizable, in fact, one of the largest in that space now.
Mm-hmm.
On the B2B side, we have companies like Vinculum, Socrati, and August are the 2 companies that we sold off. And there's a company called OnlineSales.ai, field easy. So that's kind of just to give you a flavor of the kinds of companies that we invested in.
Okay, very interesting and pretty diverse ecosystem. So I think given that you are like now in a situation both looking at as an investor what should we do, and also since you are also looking at how your founders should perform in this particular situation. So what according to you should be the focus of founders right now, both in non-fintech area and fintech area? What should be the focus of founders?
So, to be honest with you, I don't think any of the founders um, across across any sectors or any startup. I think if people are looking at uh, their future sitting in December last year,
Mm-hmm.
I don't think they would have ever imagined in their lives that a situation like this will come
Correct.
from March onwards, where April, May, June may be complete kind of wash-offs, right? So I think that's the reality which is hitting them right now. And of course, from a health perspective, I think this is, and everybody agrees that this is the right thing to do. You have to maintain social distancing, and India, in that sense, if the data was to be believed from various sources, I think India is performing that way quite okay as compared to the markets such as US or Italy and Spain and other markets. But I think this kind of a move is the right move from the bigger picture perspective. But I think the startups are going to get hit in a big time.
Mm-hmm.
There are multiple kind of views which are getting formed right now, and one view is that this is going to completely change the way the business is done. This is going to completely change the way the investments are done, the way people save their monies, the way they do their shopping, the way they eat their food, the way they do their sourcing. So there's going to be a substantial change in the buying behavior of consumers and consumption behaviors. And the view is that it's there's the whole year. The next whole year is going to really go into really make these changes happening substantially, and then post that these changes will get factored into the future of the businesses. The other side of the view, which is more optimistic view, is basically after this lockdown of 21 days, because various health indicators will show that things are improving, and there are some positive messages amongst all this negativity flowing around has already started floating. These positive messages talking about if we actually sincerely follow this social distancing, things will get back to normal sooner than later.
Mm-hmm.
But that's the other side of the view, which is quite optimistic, I would say. My view is somewhere in between. I think the lockdown might get extended if required, and in fact, there's more likelihood that it will get extended. I think a lot of what's going to happen next is going to be determined by what happens in the US and what happens in Italy and Spain and countries like Germany, even in UK. And of course, China has demonstrated, even though there are multiple views there as well, whether the data should be believed or not, etc. But if we were to go by the data which is being published out there, I think there is, very interesting lessons to be learned from how China has dealt with the situation. And I think business is getting back to normal in China. Things are getting back on track, and I think maybe as things start improving, things will start getting back on track. So lessons from the startup founders perspective, I think one always has to think of the scenario that you always hope for the best.
Mm-hmm.
You always prepare for the worst.
Mm-hmm.
Which means that if you have to prepare for the worst, then you have to assume that the next 1 year is going to be a washout.
Mm-hmm.
Washout, when I say, I mean the things are not going to be back on track, the way you would want them to be.
Mhm.
So, which means that the first thing, the only thing which is in your control, if I'm the startup founder, is my costs, right? So that's the only thing which is in my control.
Mhm.
So I have to immediately get into the action of uh, cutting all the unnecessary costs.
Mhm.
And one of the biggest directives that we are giving to our founders is that, look, any costs which are not necessary, you should straight away cut those costs. However, the biggest challenge is in cutting the costs of people, right? So there we are following a hybrid approach. On one side, the one extreme, there is this view that you should just lay off people and let your people go. And on the other side, there is a view that you should just ask people to not take their salaries for the next 3 months. I think the solution probably lies somewhere in between, where you maybe clean up your resources in such a way that the resources that are not required immediately, you maybe can think of pruning those resources. But on the other hand, rather than taking a complete salary cut, or you can actually look at the pyramid structure of the organization. The people at the lower levels try not to cut their salaries, and as you move up the pyramid, try to increase the percentage cut of the salaries in such a way that the overall cut can sustain the business. So I think some of these measures will probably help people sustain for longer term. You will also see a huge churn of the startups itself in the next
Agreed. Agreed.
months. In fact, right now you're not getting the news, but very soon you will realize that many startups have shut down in this whole process. That'll be very, very sad. Primarily because this is the kind of a time where you will start seeing founders having different views about the situations, and therefore because of different views, you will see situations leading to they even going to the extent of fighting with each other, and then the process, uh, business not going either anywhere from there. So I think that is the challenge that you would see in quite a few startups, and those startups will unfortunately not be able to move beyond the next 3 months. So that percentage might increase. That's my fear, but I just hope that doesn't happen as much, and I hope that the startups are able to really survive and move forward.
No, I think we talk about these headwinds and tailwinds in terms of airplanes, right? Today, airplanes are not flying, so I don't know what to talk about this headwinds, tailwinds. I think we have to figure out how to sort of run, walk, fight, whatever you can, right, to sort of survive and thrive. In
Yeah.
fact, from a positive perspective, do you think that there's some sort of ray of hope where startups should look at? For example, we were used to be in some segments of this, we are also hit but we have been able to sort of pull off some new deals in the segment of trainings, in the segment of online partnership. We have been able to get something around, right? So, what should startups look at from a positive side? What they can do right away?
So I look at this from a three-phase approach. There's a phase one, there's a phase two, and there's a phase three. Phase one is the phase we are going through right now, and that phase is all about fighting COVID-19.
Mm-hmm.
I think anybody who can find solutions to fight COVID-19, I think they would, definitely get a lot of value. Today, the customers, your primary customers are the governments,
Mm-hmm.
the government of India, your state governments, or governments of different countries. So you have the government in the US, or state governments in the US, or governments in Europe. They are all, anxiously looking for any solutions that they can latch onto. And then there's a lot of funding that has been approved, and different governments have approved different kinds of fundings. And on top of that, there are lots of CSR fundings which are now going into finding solutions. People have also started collaborating internationally. So we ourselves, for example, have received a lot of offers to join hands, which we are currently in the process of working on. from people from different parts of the world to find solutions. And therefore, any business, irrespective of what your other business is, I think you have to look at how you can utilize your existing capacities.
Mm-hmm.
A manufacturing business which is manufacturing something else. I mean, and one of the very good examples is liquor companies.
Mm-hmm.
So this liquor companies have been, have taken actually the mandate to really start manufacturing hand sanitizers.
Yeah.
Similarly, there are other companies who are manufacturing garments. They have taken up their capacities to manufacture masks and lab coats and things like those. So I think that's the first thing we are doing is a phase one of let's look at all the possible scenarios of what all support is required
Right.
from a manufacturing perspective, and can you utilize your existing capacities to help fight that cause. The second phase is a phase when things are getting stabilized, when the whole thing starts dying down a little bit. I think that phase you would still see a lot of people would still be kind of coming out of the shock, right? So they would still not be fully out there yet, but they would still need their essentials, right? So even in today's market, the essentials are still being provided, right? But I think people would continue to find better ways to source their essentials.
Mm-hmm.
So and the hygiene awareness and attitude towards hygiene will increase substantially. So anything which is related to healthcare, preventive healthcare, will get a boost in that time frame. So even for example, digital education will get a lot of boost. Then in fintech, I think digital payments will get further boost.
Agreed.
Any lending that can happen through digital assessments and collections will get further boost. And even other areas where all the entire supply chain related to food will get there'll be a lot more focus on that, and therefore hopefully situation should improve there as well. So I think some of these things you will see emerging in a very different way as compared to pre-COVID scenario. And the phase 3 would be when you will start seeing other sectors coming back, which may not be like essential products or services, but more even you may call them luxury goods or other such travel in selective areas, and leisure travel, etc., may come back in phase 3. But even up to phase 2, you will not see travel companies coming back in a big way. So that's the broad, bigger picture as I see it.
So that's pretty detailed. As an investor, what's your perspective right now? If there's a founder coming across to you, what segment he should be ideally from? Generally, from a current situation, what next from an investor perspective, right? So we took a view of customers, we took a view of startups, but how about investors? So your perspective, from where will you invest now?
So to be honest with you, I think I also look at these 3 phases even as an investor. In the phase 1, I'm very cautious of making any new investments right now. So
makes sense.
Things are changing so dynamically that I really don't know. Because when we make investments, we always look at the projections based on assumptions. So I really don't know what assumptions to believe in today. So in that sense, there'll be extremes in terms of views of any business right now. So if you take any investment opportunity, any investment committee right now, you can expect extreme views from different members, for investment decisions. So therefore, I don't think in phase 1 you would have any investment decisions. Most of the people around the world who had even committed to making certain investments have actually pulled back those investments. At least in our case, we are not pulling back on our investments. Whatever commitments we had made, we are fulfilling those commitments. We are just revalidating those commitments to make sure that, whatever changes that the business needs to make, whatever in the new scenario are there immediate opportunities that the companies we're investing in, they can leverage. So at least we are making the founders think about those things. Plus, in phase one, we're primarily focused on helping our own portfolio companies, really get their footing right, and supporting them as much as possible with thinking through various scenarios and making sure that they are all kind of calm, aligned, focused, and understand the reality on the ground. And many times what happens, and entrepreneurs by nature are optimistic people. Investors by nature are more on the conservative side.
Okay.
So this kind of a combination, in this kind of a scenario, you will see, the conservatism trying to fight against the optimistic mindset, and you sometimes find it hard, even in a scenario like this, to really, be able to convince your people that, look, you need to, think about really a real bad scenario. So I think that's the kind of a fight you will have. But the good news is that the founders are able to understand and appreciate the scenario, and they are working their best to find the right optimal way to find solutions. So I'm very conservative right now in terms of making new investments, but we are going ahead with the investments that we've already committed to. With the existing portfolio, we're finding all the possible solutions to get them back on track.
Brilliant. And how is work from home treating you? Handling everything else from home, all the other issues of calling people, meeting people. I think, how is it working for you?
If you ask me personally, I am used to working from home. In fact, I worked with IBM in the US for 5 years, where I saw my boss for the first time after 3 years of joining IBM.
Okay.
So it's like, I'm used to working in a virtual environment already. Of course, in India, there is not much kind of a culture of working from home so far. I think what I'm noticing is that the productivity in general has actually started improving in many cases. If people had not really anticipated this, that they didn't realize that working from home would actually increase your productivity. So in a way, I think this is a positive side of the current situation. But of course, in many cases, people are finding it difficult depending on the structure of your house, right? I mean, how many rooms do you have, and how many members do you have in the house? I think different people will have different kind of ways of dealing with the situation. People who have, one extra room somewhere probably will be able to get more focus as compared to somebody who has no option but to share their room with maybe a few other people, and therefore, struggling to get that focus. So I think, you will have varied levels of responses from different people. But for me personally, I think so far things are looking fine.
Okay, excellent. And maybe last question now, what should employees do, right? Because there is so much of challenge at a company level. From a skill perspective, get readiness, because some of them will get laid off. Some of them may have to take lower salary, but new opportunities will also come up because digital will dramatically go up in the current scenario. So what should sort of employees do in the current scenario?
So that's a very, very important question that you ask. And I think, I mean, these are obviously very tough times for people in general. So, of course, there are, one has to, first of all, take this as an opportunity. Probably this time is never going to come back. I would think that the best thing to do is somehow try to strike a balance between the professional things and personal things. And within the personal things, I think this is probably the best opportunity to spend as much time as possible with your family.
Mhm.
Try to do things which you've been thinking of doing. In fact, you keep saying that, you know, when I get time, I will do this and I will do that. This is that time, and go do it. Um, and Of course, like I personally like to compose music, so I spend
Wow.
2 hours in a day just trying to think through certain new compositions, and that's something which calms you down as well. So I feel very, it's like music for me is like meditation.
Okay.
I spend 1 hour every day with my family, and everybody knows that sharp at 7 o'clock in the evening, we all get together with music, and we do a full set of exercises for 1 full hour. And There is an alternative days we also do yoga, meditation, so that also helps keep calm, and it keeps you healthy. It's also a good idea to do fasting as and when you think you can do it. I think it's good for health. And On the professional front, I think it's a good idea to have some dedicated hours around that, and make sure that you're very focused on that, because there's always a possibility of you getting distracted by lots of things. Yes, there will be possibility, as you said, that if you are the person who get to hear from your employer that, look, you know in the short term your skills are not relevant to the company, and it's quite possible that might happen in many cases. And I think in such scenarios, uh, don't get demotivated. Things will get back on track very soon. Probably the best opportunity for those to reskill themselves. There are lots of skills which will never go out of. In fact, they'll become more and more important, especially in the technical skills like AI, ML, robotics,
Mhm.
um, you know, IoT skills. And if you can't learn technical skills, try to learn new things which you are passionate about. I think things that you are more passionate about, if you really spend even more time on those things, the chances are that you might find a completely new job which you're so passionate about that you will do much better than what you were doing in your previous job. In fact, this could be a very, very interesting time for people to really look within than outside, and really see what you would really want to do in life. So I think it's probably a good lesson for all of us.
Thanks, Vikram. I think insightful. I think maybe I have extended with too many new questions coming in. So thank you, Vikram. I think very insightful for everyone.
Really nice talking to you, and I just hope all of us pass through the situation very well, and with safe and healthy kind of you know outlook for everyone, and hope things get better soon.
Thank you. Thank you.